أحد وده يشاركنا في اللي تناقشنا فيه الأمس؟ تفضل. الله يعافيك.
بالنسبة أنا تعليق على وقت الاستراتيجية.
نعم.
في نظري الاستراتيجية how to create a plan.
صح.
Is it possible to use the microphone?
عشان ترجمة تسمعك.
الحين اوكي؟
نعم.
Yes, thank you.
welcome. الاستراتيجية هي وضع خطة.
صحيح.
سواء خطة الآن قصيرة المدى أو متوسطة المدى أو بعيدة المدى.
نعم.
يمكن أنا لأن بحكم أنا قائد كيف ندرس التخطيط على المدى القصير والمتوسط والبعيد اللي هو من سنة 3 سنوات 5 سنوات
نعم.
الآن في التخطيط الاستراتيجي احنا احنا خذينا الاستراتيجيات بشكل عام.
نعم.
بس ما أعطيتنا كيفية وضع خطة استراتيجية على الأقل في نظام اسمه سوات.
صح.
على الأقل ما كان حتى النظام هذا موجود.
صح.
أنتوا حطيتوه أساس أعرف مثلا أنا اللي مبادر أبي أسوي مشروع زين وين نقاط القوة داخل المؤسسة اللي هي سوات ما أدري يعرفونه وما يعرفونه واختصار strength weaknesses opportunities وثريت اللي هو التهديد. وين مواطن القوة وين مواطن الضعف وين التهديدات وين الفرص سواء اللي خارج المؤسسة أو داخل المؤسسة. هذا اكزامبل كان التخطيط الاستراتيجي. أنا ما أشوف هذا بالأمانة. هذا النقد يا ريت يعني مو بس لنا حتى في المستقبل إذا في مبادرين تكون هذه من ضمن الاستراتيجيات الموجودة في التخطيط الاستراتيجي.
نعم.
تحطونها بالورق. يعطيكم ألف عافية.
الله يعافيك. بس أعلق Yes, okay.
Thank you for that question. I really appreciate that. I have to say that there are many tools in strategy. There are many techniques in strategy. And SWOT was left out because of me. Because of all the tools of strategy, I think that is probably, and I've got to be careful because I'm being streamed here, it's probably the single worst tool of strategy. Not that the idea is not good, the idea is good. So it is very useful for people to think about the strengths, weaknesses, opportunities and strengths. But having worked with many, many organizations that have used this particular technique, the problem becomes one of whether we are willing to truly reflect on our weaknesses. And so what ends up happening very often in organizations is, or with businesses or entrepreneurs, is they say strengths, and we all like our strengths, we all know our strengths, and so you end up with a very long list of strengths. Weaknesses, very often people have one or two, nobody likes to admit their weaknesses, very often, particularly in public. And again, with opportunities and strengths, they tend very often not to be fully thought through. So whilst I fully agree that SWOT analysis is very much one which is available for use, I have to say, and this is more a personal thing, it's not one. I don't think it's particularly, at least whenever I've seen it being used, particularly useful. So it's probably because of me that it was left out as opposed to anything else. So that's particularly, perhaps a particular view.
Thank you, Professor Rashid. النقطة الثانية أضيفها على اللي وضح له البروفيسور. بدال سوات احنا أمس ناقشنا بستل، وبستل هي تحلل الشركة ولا المشروع ولا المؤسسة داخليا وخارجيا. طبعا تختلف عن سوات وكل واحدة لها مثل ما قال لها مميزاتها ولها يعني سلبياتها. بالإضافة إلى الورش اللي أمس والورش اليوم، وبالتحديد التحليل المالي والتحليل الاستراتيجي والتحليل إجراءات عالم كبير وفي تفاصيل كبيرة وفي تطبيقات وايد كبيرة ومختلفة بين كل واحد يطبق اللي متناسبه، ممكن حتى في اصوات ممكن تناسب مكان ما تناسب مكان بعيد، يعني بالاضافه على اللي قاله. احنا في ساعتين ما نقدر نعطي كل الامور، لكن نعطي مفاتيح. نفتح الابواب، نعطي النقاط الاساسيه، تلخيص من وجهه نظرنا اهم النقاط اللي المبادر او صاحب العمل يحتاج يعرفها، يعرف النقاط. بعدين الخطوه الثانيه نقعد في ان شاء الله برامج تفصيليه في كل وحده، يعني كل وحده عندنا في ملفاتنا كل عنوان لاسبوع الى اسبوعين. اسبوع قاعد تتكلم عن 5 ايام في 4 ساعات، يعني 20 ساعه، 20 ساعه نسويها ساعتين، اكيد بنشيل اجزاء كبيره من المحتوى، اجزاء كبيره من التطبيقات، وخصوصا ما شاء الله العدد يعني كبير. فالبروفيسور كان في البدايه يعني حاط حد ان 20 مشارك فقط في كل ورشه، اساس ان احنا حتى نعطي مجال اكبر حق النقاشات والتطبيقات العمليه. لكن لما شفنا ان التسجيل يعني عدى ال 100 قلنا نخالف، خلينا نخليها فتح الابواب ومقدمه حق المواضيع الاساسيه، ومنها التحليل المالي. التحليل المالي وايد عميق، يمكن الاستراتيجي ممكن الواحد يتناقش فيه من غير ورقه وقلم، من غير جداول، من غير ارقام حقيقيه عن شركته ولا عن مشروعه، لكن التحليل المالي يحتاج اعمق من النقاش. فنستسمحكم ان اليوم يكون مقدمه، فتح الابواب، العناوين الاساسيه، تعريفاتها، التحديات اللي تواجهها، المناطق اللي المفروض ان المبادر يعرفها بنفسه، ما يعتمد بس على مكتب. اكيد لازم يكون في محاسب، لازم يكون في مكتب قانوني يوقع الميزانيه كل 4 سنين حق الترخيص، ولكن اكو امور المبادر نفسه لازم يفهم ليش صارت في بهذا الوضع، ليش التوثيق في هذه الطريقه مو بهذه الطريقه، اساس يفهم لان فلوسه، يعني فلوس الشركه هي الوقود اللي يمشي المشروع. الفلوس هي اللي تجيب الموارد، هي اللي تجيب الاصول، هي اللي تجيب التسويق، تدفع منها الرواتب، كل هذه الامور. فنحتاج ان احنا نفهم اساسياتها، نفهم قواعدها، على الاقل الفرشه الاولى او المقدمه منها. فنستسمحكم ان ما دخلنا في التطبيقات التفصيليه في ورش العمل هذه. نعم.
ممكن انت تطرقت عن التحليل الاستراتيجي على طول، بس الاهم من التحليل الاستراتيجي.
نعم.
How to create a plan to start.
صح.
أنا أبي
Yeah, he's telling we didn't discuss the plan how to start, and this is something important. أنا معاك، بس هذه الخطة اللي يعني تحتاج تفاصيل ووقت، يعني إن شاء الله في المستقبل نقدم لكم إياها، وإن شاء الله يعني عندنا يعني أرقامكم وأسماءكم نتواصل معاكم أول مرة نتبلها.
We talking about some important points. I think how to create a plan to start your project. It's very important for us.
So some of that is what you're going to see today, because if you're going to start feedback, some of that is going to be what we're going to cover today, because if we're going to start a plan, then very often the plan it begins with putting some numbers in place. So if you bear with us for a bit, you'll see that we're going to talk about how you start that planning. Do you have
What SWOT analysis?
Yes.
It is a weakness, but in my plan, I overcome this weakness. It is important to mention the weakness in the plan.
Yes, it
For
is.
example, about teamwork. Some projects need a special performance.
Yeah, yes, it is. It is very important to understand your weaknesses. Absolutely, the business's weaknesses. When I say your weakness, I mean the business's weaknesses. But you don't need the SWOT analysis to identify your weaknesses, if you see what I mean. If you know what they are, you know what they are. The SWOT analysis doesn't, it helps you to organize your thinking, but it doesn't give you any analysis around that thinking. Yes, ma'am.
Assalamu alaikum. Hi everybody. Excuse me for yesterday I wasn't here because
Okay.
I have something to do.
Sure.
Very important. So for that. But I would like to have a very short summary for the yesterday course to exactly to be sure the basic, the one we are talking about today for the financial analysis.
Sure.
And for me, it's very important as my they have mentioned, because the start, the first is the most important one. So in summary, very shortly, if you can just tell us if we have like many choices for many of projects of business, how we can even choose.
Sure.
Because if you have like very strong 2 points and you are really don't know exactly which one you are really strong or suitable for you more than the others, it will be very good. So when you are talking about today, so I can concentrate in which project
Sure.
or which business I will focus on.
Sure.
So
Okay.
thank you for that. Just
Yes.
very shortly,
Yeah.
and we don't want to take from.
Yes.
اسمحوا لي طبعا الجماعة يعني أخذ من وقتكم، بس سمري أو ملخص قصير جدا على how to start the business. Thank you.
Okay. Can I just ask a show of hands? How many people were not here yesterday? Okay, so for that group of people who were not here yesterday, because there is it's a small number, most people were here. Can I suggest that we do that catch up during the break? Because otherwise we're going to be wasting a lot of people's time going over it. So we do that over the break if that's okay. Should we start with the thing for the day? So, okay, Assalamu alaikum. Okay, so let's make a start on this stuff on financial analysis and financial management. Okay, so really as Noof I think has outlined already, this area is very big. Okay, it's huge. If you think about financial analysis and financial management, it's a huge area. So what we wanted to do was really just focus this on the things that we can kind of feel that as an entrepreneur you need to know at a very early stage while you're thinking about the business. Okay, so that's where we've kind of focused. And so you've got to really start with, why is it that you need any form of kind of financial management, financial analysis in the first place? And really this is to say that these statements, financial statements, are really important because you as an entrepreneur, you rely on them. And more importantly, if you look at all of the people, many of the stakeholders, such as, whether they are investors, whether they are the banks, whether they are your shareholders, all of these people, and I've listed some of them there, your customers, your suppliers, your staff, they are all relying on those financial statements. So just as if you have a customer and that customer says, give me your products or give me your service and I will pay you in 1 month's time, you need to be sure that that customer is going to be in business in 1 month's time. Otherwise, if that customer goes bust or if that customer goes out of business because they don't have the money, then you're not going to be paid in 1 month's time. So these financial statements are really important, okay? And when you, as a business person, when you as an entrepreneur, if you are going to ask somebody for money, whether it's a bank, if you need a loan, whether it's a shareholder, if you need some investment, then they will want to see your financial statements. So financial statements provide your business with credibility, okay? So this was really just to say, these things are really important, okay? So managing the financial side of your business is absolutely critical to being an entrepreneur and kind of making that happen. And so what I wanted to also do then was really just to say, well, why doesn't this happen, okay? And if you have a look, there are many companies that have done all sorts of things in terms of their financial statements. And if you have a look, you end up very often with some very big companies, some very small companies. I won't name any names, but if next time you're on the internet, just search on the term accounting scandals, and you will see all the companies that have done all those sorts of things, whether it is increasing their sales figures when the sales don't exist. So rather than saying, last year we sold 15,000 KD of sales, they say we sold 75,000 KD of sales. That's not right, but people do it, you see. Or they will decrease or play with their expenses. So rather than saying my expenses are 20,000 KD, they will say my expenses are 40,000 KD, or perhaps my expenses are 20,000 KD. You see, so they can make their profits go up or they can make their profits go down. It depends on what kind of picture you want to paint. All of the numbers in your financial statement, they are telling a story. They are telling a picture. They are painting a picture. So part of what you need to do is understand the story that your financial figures are telling about you. So very often you will hear the phrase, particularly if you talk to accountants, they will say, we are going to read the balance sheet. And when you stop and think about it, just think about that phrase, read the balance sheet, or read the profit and loss account. How do you read a set of numbers? Most of us read words. We don't read numbers yet. If you look at these numbers closely, if you know how to analyze these numbers, actually you can read these numbers, because these numbers are telling a story about your business. And part of what we want to do today is kind of give you some insights as to how you put these numbers together and how you can start to tell the story of your own business. Because someone is going to be looking at those numbers and telling a story about your business. So people try to fiddle the numbers, they try to make up the numbers, they do all sorts of things to the numbers, and all I want to say is, don't do it, okay? That's the key message here, don't do it, because otherwise things start to come unstuck. We can go to the next slide, please. This is the why do. Is that the one? Okay. And the reason why people do this, and there's a big body of research in this, okay? Psychologists have got involved, business people have got involved, regulators get involved. People want to know, why is it that business people start to fiddle the numbers?
No ethics.
No ethics, exactly. No ethics, right? No ethics, which is really the last point on here. It's about the attitude that we have. And some people just don't have a sense of ethics. And they want to kind of do things which are wrong. Exactly. And then you end up with rewards. If your bonus depends on it, then people will do all sorts of things. In the banks, for example, if you are familiar with the crash of 2008, the big financial crash that happened just over 10 years ago, that was because the people in the banks, their bonuses depended on showing bigger and bigger and bigger profits. So you end up making up the numbers and making up the numbers and making up the numbers. Eventually, the bank goes down. So you end up with people being driven by personal motivation. You also have, and this I think is particularly important for entrepreneurs, which is that middle bullet point, which is the culture of the organization. It's the way in which the organization is run. If you are running a business on your own and you cannot separate you, the person, from the business, then you end up in a situation where actually it becomes very easy to find the numbers are all getting mixed up. Suddenly your personal expenses and your business expenses are getting mixed up. Suddenly it becomes very difficult to tell what is you taking some money out of the business to go and buy yourself lunch, which doesn't seem like much, but actually that's not a business expense, is it? You buying yourself lunch, or you buying yourself a watch, or you buying your family or your friends something, that is not a business expense. But if you can't separate out you from the business, all of a sudden all the numbers start to get mixed up. And that's not a good place to be. So part of what we want to kind of get you to think about is, how do you make sure that whenever you get into this area of finance and financial management, you have to be absolutely clean. And it's something I am afraid we have to say to all entrepreneurs, and that requires a sense of financial discipline. Okay? And very often, when you're running your own business, it's very easy to say, actually, nobody notices, it's me, it's my business, it's what I'm doing, it's what's the difference? And there is a big difference. Financially, there is a big difference between you, the individual, you, the business owner, and the business itself. Okay? These are two separate things. And you need to make sure there is a big wall, a big line that divides you from the business. Okay? That's what the message is here. So in effect, what we're saying is we don't want any creative accountants. Very often people talk about having creative accountants, okay? We don't want people having a sense of fiction writing, okay? This is about being absolutely straight with the numbers. Okay, so moving on then. In some ways, I guess we've kind of covered this, but tying it back to some of what we discussed yesterday, for people who were not here yesterday. Yesterday we talked about strategy, and we talked about the need for an organization to have a clear strategy. Well, your financial statements are a reflection of your strategy. If your strategy, if your objectives are, we want to sell 10,000 KD worth of profit of goods or services each month. That's the strategy, that's the objective we want to achieve. Well, your financial statements will tell you whether or not you are on target of achieving your strategy, whether you're on target of achieving your objectives. So the financial statements are a reflection, they are a mirror of your strategy. Also, if you're running your own business and you're an entrepreneur, you need to know, is my decision viable? Does my decision make sense? If I've got to choose between two projects, if I've got to choose between two types of investment, which is going to be the better decision? Your financial statements and understanding finance and understanding how these numbers are working is what is going to help you to make that decision. Is your business sustainable? I don't mean you, and I don't mean your idea. I mean, is your business, which is separate from you, is that sustainable? And your financial figures and your financial forecast and what you actually do will determine whether it is sustainable. How profitable are you? And we'll talk much more about profitability later this afternoon. How profitable are you? And are your profits going up or are they going down? What's the trend here? How efficient is your business? Is money being wasted from your business? How do you know whether money is being wasted in your business or not? These financial statements will tell you that story. And are your goals being achieved? And it was really interesting yesterday when we were talking about starting up your business. And do you remember my little example of me standing up here and going, so what's the risk? Remember that bit? What's the risk of me falling over, right? And the risk, you're saying, no, he's fairly steady. Yeah, he shouldn't fall over, so the risk is low. But if the risk is low, then if my goal is quite low, then that makes no difference, you see. But actually, if my goal is, I want to achieve 10,000 KD of sales this month, and everything relies on that. Being able to buy food relies on that. Being able to buy anything relies on that. Then suddenly, your financial statements become really important, because that will decide, that will tell you whether you are on target for achieving your goals or not. So financial statements are, in one form or another, are really important, okay? Let me also talk about governance, because that's another part that entrepreneurs very often don't do very well, okay? So if you're running your business and you're busy delivering your services, or if you're running a retail shop, or you're running a service in some form, very often entrepreneurs get so busy delivering the service that they forget to keep an eye on the finances. And so the question is, who in your business is responsible for keeping your books, your financial books? Is that something you are doing? And if so, how are you doing this? Are you using pen and paper? Or are you keeping all your records on pieces of paper? Are you using an Excel spreadsheet? There are lots of software packages around that will help you to keep your financial statements. Are you using a software package? How are you going about doing this, okay? And who is doing this? Who is responsible for doing this? Are you responsible for doing this on a weekly basis? Are you responsible for doing this on a monthly basis? Have you got somebody else doing it for you? And are they actually doing it? So if it's you, are you actually doing it in the time available, okay? So understanding governance and financial governance is really important if you're going to run your own business. And again, I would say very often entrepreneurs get so caught up with doing the business, they forget this part of the business. To the next one. So financial controls also reflect the culture of the business. If you allow things to happen in your business from the finances, so if you happen to, and I'll give you some examples, right? I have worked with businesses that are retail businesses, and sometimes at the end of the day, either the owner or a senior member of the staff will open the till, and they will look at the cash in the till, and they think, I need £20 because I need to go somewhere. So what I'm going to do is I'll take £20 from the till because this evening I'm going out somewhere. And what I will do is tomorrow morning, I will go to the bank, I'll go to the cash point, I'll take £20 from my account, and tomorrow I will put it back into the till, right? Now at one level you think, well, if the money comes back tomorrow, if the £20 comes back tomorrow, it's not too bad, is it? I mean, no money has been lost. The £20 that went out was the £20 that came back. But actually, if you think about this from the culture of the business, if you allow that to happen, worse than that, if you do that yourself because you own the business, then you can begin to see that the culture of the business is not great. And whilst there is you and maybe one other person in the business, so you're running a business, say with 2 people, or even 4 people, if you allow that to happen, because you know your team and you know the people you are working with, that's all right. You know that, right? But what happens when your business goes from 4 people to 8 people to 80 people? What happens then? And once people start to behave in a certain way, once you have a business has a certain culture, it's very difficult to change that culture. time for press? Is it? Should we take a break? Absolutely.
نوقف 10 دقائق حق صلاة المغرب بس الله يخليكم نصلي ونرجع على طول على اساس ما نتاخر بالورشه الثانيه بعدين نفتح الساعه 9:30. حياكم الله. معنا نستكمل نقاشنا بالتحليل المالي مع بروفيسور آشلي. قبل أن نكمل بس عند المدخل عند التسجيل في إصدارات المعهد العربي للتخطيط عن ريادة الأعمال وعن المبادرين فتفضلوا الإصدارات مجانية حق اللي يرغب في الحصول عليها.
Okay, let's see if we can move the story on. A couple of questions or a couple of issues that came up during the break. One of the observations was on one of the previous slides. We won't go there, but one of the previous slides, I talked about a finance director. And you only find finance directors in big companies, right? Normally entrepreneurs or SMEs, small businesses, don't have a finance director. And perhaps I should have been clearer in my explanation first time around. And that is, the reason I put the words finance director on there is because entrepreneurs, when you're starting, you need to behave, you need to think like a finance director. Even though you may not have a finance director, you may not be employing a finance director, entrepreneurs need to think and entrepreneurs need to behave like finance directors. And so part of what I kind of want to get across here is even if it's just you in your business and there is no one else in your business, that doesn't mean you don't think like a finance director, if you see what I mean. During the break was, when it comes to doing things like keeping your accounts and keeping your records, is that something the entrepreneur should do, or is that something that you should get some other company to do? Because clearly there are lots of companies that will do and keep your accounts on an ongoing basis. My thought on that is, I would suggest that if you're an entrepreneur, you should start by keeping your own books. And the reason I say that is because you need to learn, you need to know how to keep a set of books. You need to learn, you need to know how, for example, you reconcile the bank account and the bank statement on one side from the accounts that you're keeping, the records that you're keeping on the other side. If you haven't done a reconciliation of your bank account, if you haven't matched all the payments that are going out on the bank account with the invoices, if you haven't matched all the money coming into the company bank account with all the invoices you have issued, if you haven't done that yourself, then I would say you ought to, just so that you know what it is. That way, when you do ask some other company to do that for you, you know what they are doing. You know the questions to ask. You know if they're doing it correctly or not. If you don't do it yourself, if you just say, from the first day, I'm just going to get someone else to do it, then your business is completely under their control. Because you won't know whether they have done a reconciliation correctly. You won't know if they have checked everything off or not. You won't know whether what the service they are giving you is a good service or a bad service, because you've never done it yourself. So my starting point is do it yourself. Once you've done it for a bit and you think, okay, I think I understand this, then if you want to go and get somebody else to do it or outsource it, as they say, if then you want to outsource it, then you are at least doing it from a position of knowledge. And therefore you're doing it from a position of strength. Otherwise, you've got someone else running your business and you won't know what's going on with the finances of your business. So have a little think on that, and thank you for the questions that were asked during the break. What I want to also do, and this ties back to some of the things that we talked about yesterday, okay? So if I could go to this one. Today, we talked about strategy, we talked about objectives. Objectives are things that the business wants to achieve, right? Objectives are those things that you can quantify. I want to achieve 10,000 KD of sales every month for the next 12 months, or whatever the financial objective is, right? We also talked about marketing and selling, if you remember, yesterday afternoon. So your marketing plans will start to identify what your target customers are, what your target segments are. Your sales plans will set out how much sales you want to generate, where those sales are coming from. Well, all of that analysis, all of that work that you've done based on the discussion we had yesterday forms the basis for your financial targets. And my friend here was asking earlier, how do we get started? Where do we start? Show us how we put a plan together. Well, your plan starts by setting out, this is our strategy, these are our markets, these are our objectives, this is the things I'm trying to achieve. And when you've started writing those sorts of statements down, you are starting to write your plan. Here's a question for all those who were here yesterday. Do you remember I left you with some homework? You remember? One of which was write your values. How many of you did that? How many of you took a pen and paper or your iPhone or your iPad and wrote your set of values out? 1, 2, 2.5, 3, any more? 3. Okay. If you didn't do it, did it make any difference to your business? No, made no difference to your business, did it? But actually, it did make a difference to your business, because if you had done it, you'd have started writing your plan. But as you didn't do it, you haven't started writing your plan. How many of you have started to think of which market segments you're going to go into? 1, 2, a few. That wasn't part of the homework, I know. But each time you let a day go by, and you don't answer some of those questions, you're not writing your plan. This plan is not some miracle that happens. It's not some fantastic thing that happens. It just requires you to sit down and say, what is my business about? And when you start to write your mission, your values, your strategy, your objectives, when you start to identify which target markets you're after, when you start to say where your sales are coming from, all of that is your plan. So what we've been talking about since yesterday is how to get started, actually. Can you see? And then your financial statements take all that information that we talked about yesterday, your financial statements, turn those into a set of financial objectives. So these become a set of targets that you say, I am going to achieve. And here is where it gets really interesting, okay? So if I pick up some of the things that we talked about yesterday, if you say, I am going to achieve 10,000 KD of sales this month, what date is it today? Second, right? Second, okay, second. Two. Yes, that's the date. 2nd of Feb 2020. And this year we have 29 days in February. Yes? So from now to the end of the month, you've got 27 days. Right? You want to achieve 10,000 KD of sales this month. How much should you have achieved by next week? 2.5. Can you see? Assuming you want to split it in 4 equal weeks, roughly 2.5 KD. So you're going to achieve 2.5 KD in the next 5 days. I choose the number 5 on purpose because 2.5 is 2,500 divided by 5 days. 5 goes into 25 quite easily. That's why I chose it. How much per day? 500 KD per day. So you don't have to wait. You don't have to wait till the 29th of February to look at your bank account, your business bank account now, and say, oh my gosh, we didn't make the target. You don't have to do that, do you? You don't. You don't. You just need to wait till tomorrow evening. And by tomorrow evening, you have either sold 500 KD or you haven't sold 500 KD. And if you haven't sold 500 KD, I'll tell you tomorrow evening that you're not going to make your target. Now, you will tell me, that's not a problem, Ashley. That's not a problem, because day after tomorrow, I'm going to sell 1,000. And I'll say, great, great. So day after tomorrow, I'll tell you whether you're on target or not. Because if day after tomorrow you haven't sold 1,000, in fact, if day after tomorrow your sales are still 0, I'll say you're definitely not going to make your target. Can you see? So these things called financial objectives, these targets are really important. Yesterday, for those who will remember, we talked about, do you remember that little diagram? Are you going north? Are you going west? Are you going northwest? Are you going northeast? Do you remember that? And somebody said, but if, what do we do if we're going to go north and then west and then north and then west? It's going to cost. So my question, do you remember my response yesterday? My response was, if you are going to go and grow your business, some part of your business, some part of your revenue has to be reinvested into developing your product, developing your service, so that next year your product or service is even better than where it is this year. And your financial statements and your financial policies should say, how much of your money are you going to reinvest? How much of your money that you make in your business are you going to reinvest in your business? 20%, 30%, 50%, 70%. I don't mind what that number is, okay? That's your choice. As an entrepreneur, every entrepreneur makes the choice of what they want to do with their business. But I'll tell you now, if the number is 0%, what do you think that's going to do to your business in a year's time? It's going to start going down. Entrepreneurs are very good at doing lots of things, but when it comes to investing into the future of their business, and if you're running a training business, for example, as I heard some of you doing, then that's about you investing in yourself. That means you going on training courses to keep yourself up to date. If you're running a business where you are delivering a service, then my question is, how much are you investing in those services that you are delivering so that next year's service is better than today? And if you're not making those investments, if you don't have any policies, any financial policies for how you are going to run your business, and this is why I say this is about thinking like a finance director. It's about thinking like a finance director, even though you're an entrepreneur. That's how you keep your business going. And the last one, which I will come back to a little later on, around cash flow. How much cash is your business actually delivering? And what is your policy in terms of cash flow? And when I say cash, I don't just mean physical currency. I'm talking about the revenue, the income from your business, okay? I'm not just talking about physical notes. I'm talking about the revenue from your business, but I'll come to that at the moment. No, not that one, just the one before. Yes, that one. So, Here's my question to you. And I'd ask you to talk to someone next to you, or you know the routine if you were here yesterday, right? Talk to someone next to you, talk to someone, or have a think on your own. And if you're three, then 2 or 3 people, talk amongst yourselves. And the question is, why is a budget important to entrepreneurs? Why is doing a budget important, okay? So I'm going to give you a few minutes to have that conversation, and then we'll talk about it in a few minutes. Has everybody had a chance to have a little think about this? Okay, so go on. Who wants to call out? Give me 1 or 2 reasons why budgets are important, ma'am. There should be something in your, or there's a mic here. Yes.
To measure our profit, for sure.
Yes.
And also how our policy is successful, because if we have the right policy to start with,
Yes.
it will be the perfect way to measure if you are going on the right way or not.
Absolutely.
And
yes.
I'm giving.
Sure. Who
I
else?
don't want to finish all.
Who else wants to contribute? Gentleman there, just there. Yes. It helps to create a spending plan, yes. And it keeps you out of debt. It keeps you out of debt, so you can manage your cash flow to keep you out of debt. Agreed? Who else? Sir.
At least you know the life cycle of your project.
Mm-hmm.
Is it going right or wrong? Are you getting profit or not?
Yes.
Even you can know the future of your project. Will you continue or you will stop?
Yes. So it gives you an idea as to the life cycle of your project. Are you on target? Or are you not on target? Should you continue? Should you stop? Absolutely. Anybody from this side? Yes, ma'am. So to be able to control yourself and to be able to control your business.
Control myself and our business.
Yes. So you can both control your own behavior and also what your business is doing. Absolutely. Anyone else? Gentleman at the back there. Sammy's step count is going to go up, huh?
Some reasons to the importance of having budget of your project actually is to let you know the sources of fund from
Yes.
where I will get the money first. How much can I get? How much I have, and how much maybe I will take from debit, or I will find partners to be
Yes.
with me in the business. Plus, also it helps me control my cash flow, and this will lead me to a better decision making. What I will do with my money.
Yes.
It also, as just as you said for the next slide, you said you can also take better decision for the opportunities.
Yes. So it gives you an idea as to where the money is coming from, the sources of the money. It's really important because that will tell you whether you're hitting your target market, for example. It also lets you know what your cash flow is going to be, and it helps you to take better decisions over time.
When these financing needs will be or to plan for the financial needs.
Yes.
Because of that, they have also to put the
Ju-
capital,
Yes.
the working capital.
Yes.
This working capital help them also to cover all any emergencies from the budget.
Exactly. So it helps you to understand your working capital. It helps you to understand what happens if something unexpected happens to your business. So you can keep some reserves, keep some money in reserve in cases unexpected shocks. So, yes. One more? Yes.
Also, how we can put our profit in the marketing policies, and also for the word for our employees.
Yes.
And what's the next steps for every kind, like investment or collaborating with other companies or the employees you are working with.
Yes.
And for the next plan.
Yes, very much so. Very much so. So I should let you know that now that you've given me all those answers, actually you've saved yourselves an awful lot of me talking, right? Because if we go to the next slide, so is that budgets and forecast models? Forecast? No. Really? Yes, this is the one. So this is the list I came up with. And actually, if I think about what you just said and what I came up with, there are lots of the points that I was going to make, you have already made. So it's critical to planning. It's looking at your plans. It's how you're going to convert the plans and the strategy into cash, into dinars. There are some things I'd like to pick up which weren't mentioned. Very often forecasts and budgets are based on assumptions. They're based on what we believe is going to happen. And it's really important that you document, that you write down what those assumptions are going to be and what those assumptions are that you are making. So if, for example, you think, I'm going to make 5,000 KD this month from my market segment of women who are 20 to 25, then that's an assumption you are making today. You don't know whether that's where the money is actually going to come from. You don't know what that source is actually going to be, to pick up on the point that you made, sir. But you made that assumption. I think I'm going to get 5,000 KD from this segment. It's an assumption. And the key thing with forecasts, or the key thing with budgets, is to go back and revisit, to go back and examine those assumptions, to see whether those assumptions are actually correct. Because if it turns out that actually your 5,000 KD didn't come from women who are between the age of 20 and 25, but they actually came from, I don't know, a different age group or a different segment altogether. If it came from children who are 10 to 15 years old, that those were the segment that gave you your 5,000 pounds, your 5,000 KD. Someone's doing Morse code. That's not me. Okay. I just thought I should tell you. That wasn't me. Yeah. Oh, okay. Thank you. Thank you. If your sales have come from a completely different source to the one you assumed it was coming from, you've got to go back and change your budget. But more than changing your budget, actually, maybe you need to go back and change your assumption. Can you see? And what we don't do very often as entrepreneurs is we don't always keep a record of what our assumptions are. We just keep it in our heads. And actually, if you keep it in your head, you can't keep track of all the changes that you're making. So just as I suggested to you yesterday, you need to write down your mission. You need to write down your values. You need to write down your strategy. You need to write down your objectives, all of which are going towards building your plan. You need to write down your assumptions. And then once they are written down, you can go back and say, you can go back and what's called test your assumptions. You can test them to say, am I making the right assumptions or not? Because those assumptions will affect the figures in a big way. And then you can then start to compare your budget with what you actually get. Actual versus budget. You can look at variances. So you say, this last month, my budget was 3,000 KD in expenses. My actual was 5,000 KD in expenses. So what happened? Where did this extra 2,000 come from? Because I was not expecting it, because it wasn't in the budget. So 2,000 KD had to be paid out. Why? What did I miss? Now, if you've realized what you missed, then you can build it in to next month's budget so that you are not caught unawares. You're not suddenly thinking, oh my God, I need to find 2,000 KD. Where's that coming from? So keeping track of the budget and the actuals is really important, okay? And you can do your budgets on a daily basis, on a weekly basis, on a monthly basis, how your frequency, how often you do it, that will depend on your business. And some of you will do this every month. Usually it's monthly. For most businesses, they have monthly budgets. But some businesses, if there's a lot of activity, it could be even more frequent. It could be more often than monthly. Yeah, exactly. So think about that, okay? And the last thing, if you have ever, how many of you here have gone and asked for a bank loan or asked the bank to you don't need to answer this if you don't want to, but if you have been to a bank and asked them for money, right? For a loan or an overdraft or some support, some financial support, the bank is, and I know because I spent 12 years in banking. No, I've not been an academic all my life. I spent 12 years in banking and I spent 12 years lending money, okay? That was my job in the bank. And I'll tell you now, whenever anybody came and said, I need this money, whatever it was, for my business, the first question is, show me a forecast. Show me how you're going to use this money and show me a forecast, because I need to know what that money is coming back from. And so whenever you're relying on going out and talking to an investor or to any kind of bank or anywhere, they're going to ask you for a forecast. So forecasts and budgets are really important, okay? You've got to take them quite seriously. Does that say pull everywhere? No, that one's gone, right? So what I wanted to do, this is steps to creating. No, we're not doing pull everywhere. Yep. What I wanted to do was really to suggest that if you are going to develop a budget, and many of you will have, so apologies if you already know this, but if you are going to develop a budget for your business, then here are some suggested steps that you might need to take, okay? And we all keep budgets, right? We all have budgets. We have a budget at home for what we're going to spend on food, what we're going to spend here, what we're going to spend there. We all keep budgets at home. So this is an extension of the core idea of budgeting, okay? Which we all do intuitively very often in our day-to-day world, in our day-to-day lives. But here are some steps you might want to consider. Have a template. Create a template, ideally in Excel, for those of you who know how to use Excel. And if you don't know how to use Excel, then I would suggest there's something for you to learn, because Excel is a really good way of developing your budgets, okay? You don't need very often, particularly when you're in a startup business, you don't really need anything much more fancy than basic Excel, okay? And Excel is fairly easy. The basic ways of kind of functions of Excel are fairly straightforward to learn if you've not used it. So set up a template, okay? And the template might be things like, make a list of all the things you need to buy. Think about how much you're paying per unit. And this is really interesting, because when entrepreneurs, particularly those who are providing a service, when I say work out the cost per unit, it's really interesting. Because service providers, like consultants or trainers or people who are providing a service, they're very good at saying, okay, to deliver my training or to deliver my consultancy, so I need a room, I need some material, I need a laptop, I need some tea and coffee, I need all of these things to run this workshop. And I say, so what are you missing? There is another piece of cost which is missing. What do you think that cost is that everybody that's running a service business usually leaves out? Time. Whose time? Your time. I thought you would get that one. That was just for you, by the way, in case you're wondering. Yes, exactly. Your time. And you'd be surprised how many entrepreneurs will say, okay, the cost of running a one-day workshop is 750 KD because the hotel, the room, the food, the coffee, the tea, the materials, add it all up, it's 750 KD. So if I charge my client 750 KD, that's it, that's great. And then I say, but what about the 6 hours or 3 hours or 8 hours that you are putting in? Where's that cost? It's like, whoa, hang on a minute. And very often we don't cost our time in this. We don't put our salary into that business. And that is a business cost. And so part of what I would suggest you want to do when you're thinking about putting this budget and working out your unit costs, don't just do it for the things you are buying it, do it for yourself. You have got to have a value on your time. And if I give you an example, right? I'll give you an example. So years ago, when I was only just starting out in academia, and I started up my consultancy business, and I had my day rate, okay? And there was a professor in the university that I was working with, and he asked me one day, he said, so Ashley, how much do you charge per day? And I thought, this is a bit strange. Nobody ever asks that sort of question. That's a very personal question because, the day rates are day rates, right? You don't normally talk about day rates in public. And he went, so anyway, I told him. And he said, really? Is that all? I said, really? You mean you charge more? He said, Ashley, for that day rate, I couldn't even afford to buy myself dinner, right? Get this? I couldn't even afford to buy myself dinner. Now, we're talking a 4-digit number here, right? Is my day rate. And I said, oh. And he said, so I asked him, I said, so how much is your day rate? And he looked at me and he said, my day rate is £5,000 per day plus expenses, plus VAT. And my reaction was a bit like here. I started laughing. I said, what? £5,000 per day? I said, I can't. And he said, so that's the difference, he said. He's a professor, I'm a junior, right? He said, Ashley, that's the difference between you and me. And I thought to myself, wow, that's really interesting. So he said, here's what I want you to do. He said, Ashley, here's what I want you to do. I want you to go home. I want you to look in the mirror. And I want you to look in the mirror and say into the mirror, my day rate is, and he said, put a number on it. And when you put a number on it and you start laughing, because that number is so outrageous, you're not worth it. But when you can put a number and you can keep a straight face because you believe that is what you are worth, that's the price you're worth. It's about you and what you believe you are worth. What are you worth? What is your hour of time worth? What is the value of 1 hour of your time? And if you go and deliver your service for free, then you are saying to everybody, the value of my 1 hour of time is 0. In other words, my time has 0 value. Now stop and think about this. If your time has 0 value, what is your customer thinking about you? Put yourself on the other side, right? Put yourself on the other side now. You see a bottle of Dior perfume, 400 KD for 50 little milligrams or whatever they measure it in. 400 KD for 50 mil. You think, wow, that must be special. You see a bottle of Dior perfume, 10 KD
What do you think? What do you think? No, more than cheap. Go on, what do you think? Rubbish. It's not Dior. It's water with a bit of... Someone has put a... You think, this is rubbish. Right? That's what you think. And that's 10 KD. Yeah, can you see? You're giving it away for zero. What do you think people are thinking? So part of what entrepreneurs need to learn, and we talked about it yesterday with the pricing, is what am I worth? Okay, and you need to build that into your budgets. Okay, you need to think about where your revenue is coming from. My colleague, my friend over here said you've got to think about the sources of income. What's your sources of income? And those sources of income need to match with your marketing plan. They need to match with your strategy, because that's where you set out the markets you are going to target. Can you see? This is all now starting to wrap together into a story about your business. My business mission, my business values, my strategy, my market segment. I'm going to turn all of those now into a set of financial numbers, and that's what I'm going to model in my forecast. And then you can start to do, we talked about assumptions, right, a little earlier. Then you can start to say, okay, so how do I line up all these things? Does it make sense? So do the budgets match the plan, match the strategy? And then finally, you can get some feedback. Show this around to people. Say, what do you think about my budget? Do you think it makes sense? Have I missed something? Yeah, why not? At least they're people you trust. And then you can go to our specialists, absolutely. But I thought the first people, right? Go and ask people you trust. But absolutely go and ask specialists as well. That's for sure, right? So all I'm saying is, and then you can start to say, okay, now my budget is pretty much ready. Now I can start to say, let me start to compare it with what I'm actually doing. All of these stages are steps towards putting your plan for your business together, okay? I don't want you to think that the plan is something different to what we're talking about here. Yeah. Okay, so this kind of goes back to where we were when I first started. This is saying that you need to have what's called a true and fair view of your accounts. You need to have a true and fair view of the financial figures. And you can start to take... you can start to look at various things. So what are your revenues? What are your sales? What's your cost of goods? We talked yesterday, you mentioned direct and indirect costs. So you can start to say, what are my direct costs? What are my indirect costs? So fixed and variable costs as well. So for example, if you think about this room, right? There are some costs which are variable. So think about the electricity cost. Right? If this room is kept in complete darkness, no lights are turned on for a whole month, the electricity bill for this room is zero. Can you see? But if this room has, the lights are on 2 hours one day, 5 hours another day, 10 hours another day, 24 hours another day, you can begin to see that the costs will vary. So that's called a variable cost. In other words, the more you use, the higher the bill. Can you see? And then there are some costs which are fixed. So for example, we might rent. Rent is fixed. Whether you make £1 of sales, whether you make no sales, sorry, if I say pound, I mean dinars, right? You know that. Okay. Whatever the sales are, you have to pay your rent. If this complex here has 3 cleaners, whether this room gets cleaned or not, you've still got to pay those salaries. The salaries and installments, your loan installments, your loan installments, card installments. These are all fixed. You've got to pay them whether you make any money or not. So all I'm saying is that there are different types of figures, different types of costs that you want to bear in mind. If I move to the next one. Yeah. So this, I think we've covered a lot of this. So look, once you've kind of got your budget in place, once you've got your business started, you can say, what is the actual versus the budget? And people use this word, at least in English, it's called variance. What is the difference between the two? And you need to monitor the variance on a monthly basis, ideally, okay? You should be looking at, am I above budget? Am I below budget each month? And why is that the case? And this is where I strongly urge you've got to have some risk. Because if you say, I'm going to make 1,000 KD of sales, and you don't make your 1,000 KD of sales, and nothing changes, your lifestyle doesn't change, you live the same way, everything goes on, it makes no difference, this is the conversation we were having yesterday, then quite frankly, your business is never going to go anywhere. I give you the example again. Imagine you had 5 KD in your purse or in your wallet, and that's the only money you had to spend between now and the 29th of February. Nothing more. You couldn't ask anybody for more. You can't get any more. You've got 5 KD to spend. Now tell me about the sales in your business. Now tell me about missing your sales targets. If you relied on your business revenue, your business income, to buy and pay for groceries next week, or your children starved, I tell you now, you would be pretty focused on making that sale because you wouldn't want your children to starve, you see. But if you miss your targets and you live your lifestyle as normal, you're shopping in your favorite shops, you're going to your favorite restaurants, your kids are doing the things they always do, it makes no difference at all to you where you live, then quite frankly, your business is only an idea. And will only ever be an idea. And also to kind of give you some of the jargon that accountants or people who deal with accounts generally use. So things like a profit and loss statement. Forgive me if you already know this, but from a business point of view, a profit and loss statement says, this is my income. It's the income statement. This is my income. These are all the expenses. This is my profit at the end of a period. And profit and loss accounts cover a period of time. So you can say, this is my income, these are my expenses over a month, or over a quarter, or over a half year, or over 1 year. So profit and loss covers a period of time. Balance sheets, which is the third one there, balance sheets are at a point in time. Yes. So balance sheets are a point in time, whereas profit and loss is over a period of time. And a balance sheet says, these are my assets, these are my liabilities, these are the things the company owns, these are the things the company owes, liabilities, and this is what is left over, and what is left over is referred to usually as the capital of the company. Okay? And the third statement is what's called a cash flow statement, and a cash flow statement covers what money has come into the business, and I don't just mean physical notes, I'm talking money coming into the business, what money has gone out of the business, and what are you left with, okay? And the best way to understand, or the simplest way, I should say, not necessarily the best, but the most straightforward way of understanding your cash flow statement for your business is look at the last 12 months bank account of your business. So if you receive your statements on a monthly basis, pull out 12 months, the last 12 months of your business bank account, look at all the money that has come in, all the credits, look at all the money that has gone out, all the debits, add those up over the course of the year, and that will give you a good idea as to what your cash flow is. Ideally, you want the amount of money coming in, i.e. the cash coming in, to be more than the money going out. And that's a positive cash flow over the course of a year or over the course of 6 months. So those are the 3 types of statements. You can then start doing all kinds of analysis, okay? And typically if you can do this analysis over a period of time. So what I'm going to talk about now at one level for the purposes of what we're doing is a little bit theoretical, but I want you to be aware of what these things are, okay? I want you to be aware of what these things are. If I go over to, sorry, just before we go to the next one, the key thing when you're talking about, for the next few slides that are coming up, any one ratio, any one piece of analysis at a point in time doesn't tell you a story. But when you do this for 2 years, 3 years, 5 years, you start to build up a trend. You start to build up an idea of what is going on over time. That's the story of your business. That's the story that investors, that experts, that bankers will look at. They want to see what is the trend in your business. So when the next few slides I'm going to talk about, any one ratio doesn't really tell you much, but when you've got 3 years, when you've got 5 years, it tells you a great deal, okay? So very quickly, let me go to the first one, which is around liquidity ratios. Is that liquidity ratios? Yeah. So liquidity ratios, generally what they tell you is how much liquidity, how much money is there in your business? How much cash is there in your business, okay? This is a very, very basic definition. If there are accountants in the business, and bear in mind my partner here is an accountant is an accountant, and this is why I am doing this part, because she would go, this is just not technical enough. But this is not the point about getting and being hugely technical for the purposes of today. This is about just trying to give you an idea that there are a whole set of ratios that you can use to understand the liquidity, to understand whether your business can pay its way in the short term. And there are two main ratios. And what I've done in each case over the next few slides is I've given you the name of the ratio. So in this case, the first one is the current ratio. I've given you a definition of what it is, and I've given you the formula of how you can work it out for your business, okay? It's different to net present value. I didn't come into net present value for today's purposes because that requires a significant amount of pre-knowledge, yes. And net present value, trying to explain net present value in the time available it would just confuse people, which is why I haven't included it. But net present value, if you do get a chance, do look at it, particularly if you're running a project. It's a very useful way of understanding where to invest, okay? But it's a big subject, and I don't want to open that door and then confuse you on net present value. Yeah, you can work on it. Yes, yeah, absolutely. Those are all different types of analysis that you can do. I've kind of started at the basics because this is more introductory. So liquidity ratios, the two main ones are a current ratio and what's called an acid test ratio, okay? And what I've done here is given you kind of the definitions and how you can make it work. There are two. No, there's only one. There should be only one. It's current assets minus stock divided by current liabilities. It could be that it looks the same. No, it doesn't. Sorry. The acid test. Okay, so an acid test ratio, I'll read what's in English, and then you tell me which is on there, right? I have one. I have one explanation and one formula. Okay, the Acid test ratio, it's like the current ratio, but is calculated taking a more prudent view of short-term liquidity. Okay, and then the formula is acid test ratio is equal to current assets minus stock divided by current liabilities. Okay? Oh, okay. 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 Yeah? Okay. Thank you. Let me move on to the next set of equations then. This should be the turnover ratios. Turnover ratios, generally, turnover ratios, and there are many of them, they show the activity in the business. They show how much movement is there in the business. So, for example, if you look at inventory turnover, this is stock turnover, then this is saying how often is your stock moving through the business. And again, it gives you the formula for how you work out your inventory turnover. Debtors turnover. This says if we give to our customers, right? If I say to my customer, you can take my product now, but pay me in 1 month's time, that is a debt. The customer owes me money. And the debtor turnover says, how good are they at paying on time? And I have seen businesses where the debtor turnover is 180 days. In other words, yeah, Ofer is right. In other words, I sell today, I have to wait 180 days to get the money from my customer. It's not a good way to run a business, is it? I've seen situations where companies are really profitable and they have gone out of business because of this. Can you see? And in the UK, I don't know about here, in the UK, where you have a big company, particularly say a construction company, and it has got a smaller company, which is a small company, that is the supplier, very often the big company will say to the small company, if you want my business, wait. I'll pay you when I'm ready to pay you. So 180 days becomes 200 days, becomes 220 days. It's really difficult to run a business when you're not getting the cash coming through the business. Can you see? So turnover ratios are really important. Equally, creditor rate turnover, the third one, this is saying if I'm looking at my suppliers and I take something from my suppliers, when do I have to pay them? And it could be that I can pay them in 30 days, or I have to pay them in 200 days. You see, in which case I'm making their life difficult. Exactly. Now, yes. And this is where it gets really interesting, okay? This is where, because you're right, everybody says wait, okay? Now it comes back to the values of the business. Do you remember those things we talked about yesterday? What are your values and what are the values of the business? And so part of what I would ask you is, now you start to say, do we actually live by our values? Or are the values that we put, we are committed, we are reliable, we are honest, we operate with integrity? All those words are meaningless if on this side you are telling your suppliers, wait 200 days, and on this side you're telling your customers, pay me now. Okay, say, maybe this is not integrity. It depends on the values of the business. Okay, leverage, which is the next one. Leverage is all about debt. How much debt are you using in your business? Okay? And what this compares is how much debt i.e. how much money is borrowed versus how much money the owners are putting into the business. And again, there are various leverage ratios that you can use. And the last one is a set of ratios, are profitability ratios. How profitable is your business? And there are various ways of calculating your profit. So people talk about gross profit. They talk about net profit. They talk about profit before depreciation, profit after depreciation, profit before tax, profit after tax, profit before interest, profit after interest. So there are various ways in which you can calculate your profit. And the question is, how profitable is your business based on those different levels of profit? Okay? So, again, any one of those ratios, if you only have one, it doesn't tell a story. If you have 3 years, 5 years, it starts to tell a story. If the trend of your profitability ratios is doing this, everyone goes, wow, that's a good business. If your profitability ratios are doing this, people go, that's not looking very good. Is this business going to be around? Should I be trusting this business to be around next week or next month or next year? Because these numbers tell a story about your business, I go back to where I started. There is always this temptation, I'm going to change the numbers a bit. I'm going to make the in revenue a little higher. I'm going to make the profits a little more. I'm going to hide a bit of cost. I'm going to do, because over a period of time, you want the trend line to look in a certain way. And some people want to disguise these trend lines, okay? Last bit. The importance of cash. We talked about cash. And when I say, I'll say it again. When I say cash, I don't just mean hard notes, okay? I'm talking about money that is coming into the business. The single most important number is the money coming into the business and the money going out of your business. So understanding the trend of what cash is coming in and what cash is going out is really important, okay? So it's everything in your business bank account, all the money coming in and all the money going out, okay? And you've got to look at the difference between the two. So you've got to look at the net cash flow. So if in a particular month you've got 1,000 KD coming in and you've got 700 KD going out, your net cash flow is 250 positive. If you've got 1,000 KD coming in and you've got 1,500 KD going out, your net cash flow is 500 negative. Now, that's not necessarily a bad thing. There are lots of people for a few months have a negative cash flow. But if over a period of months that become years, your cash flow is going negative, that's not sustainable for a business. No business can sustain a negative cash flow for a long period of time. If it's stable positive, that's fine. Stable positive is fine. But stable negative is not fine. You see, it becomes unsustainable over a period of time. Last question for you. Last question before we take a break. So, which is more important? Positive cash flow or profits? Profit? Cash flow? Cash flow? Profit? Any? Both. I love that. But if I said choose one, what would you say? Go on. Cash flow? Cash flow, okay. So, if you have a choice between the two, cash flow is always more important than profit. Companies can make a loss for a very long time. Provided that cash flow is positive, they won't go out of business. Because if your cash flow is positive, you can still pay your staff. You can still pay your rent. You can still pay the salaries. You can still pay for more stock. You can still invest in your business because you have money coming into the business. Profit is an accounting mechanism. If you go to an accountant, they will make your profit whatever. This is a creative accountant. They will make your profit whatever you want it to be at one level. Can you see? So profits are affected by all sorts of things. Profit is affected by depreciation. Profit is affected by exchange rates. It's affected by all sorts of things. But money coming into your account and money going out of your account, that's the most important. Cash flow always is more important than profits. If I can ask you to think about that. A couple of, yes. Assets. So if you, so yes. So assets are things that you own, right? Assets are things that you own. Assets are important, but you cannot pay your staff with your assets. Think about it that way. You cannot pay your rent. But even in the long term, assets are important to keep your business going, but cash and cash flow is what sustains you over a period of time. So one is about, assets are about things that you have. Yes. 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 Value goes up. Yes. It's future cash. Future cash. Future cash is still not worth current cash. And somebody talked about NPV, net present value. Yes. So there are other ways to work it, but to explain that, you need to understand the time value of money. And to go into the time value of money is at least a half a day to cover the time value of money. To really work it out properly. So just to kind of round this off, absolutely having assets that appreciate over time or become more valuable over time, absolutely that's important. But what matters kind of month to month is the cash flow coming in. When you sell that asset and you realize the cash, that's when you take it into your cash flow. Yes. 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 And that's fine, but it's something about the future, right? At the moment, I want you to think that the cash you have coming or the money coming into your bank now is what matters. Otherwise, we are living on something that is a promise, something that may happen in the future. Can you see? And I want you to think about your business in terms of what we are doing now. Okay. A couple of announcements, and then we're going to take a break. One is, we really would like some feedback about this program, okay? So if you are willing to provide some feedback, what I'd like to do, and I've done this in many other occasions, is I'd like to capture your feedback, if possible, on video. So I'm going to ask 2 or 3 questions, and I would ask you to just kind of answer the questions, but rather than writing it down, to answer by way of a video. So if you are open to doing that, if you just come down and let me know, I would appreciate that. Happy for you to speak in either English or in Arabic, whichever you're more comfortable in. The questions are going to be the same. So if you're interested in that, do let me know.
من فضلكم اللي ما سجل اسمه عند بالدخله يحرص انه يعطينا اسمه بس اساس نجهز الشهادات حق ورشه اليوم الساعه 5 والساعه 7 و yeah. Only the certificate, right? في ملاحظة ثانية على الإخوان اللي طلبوا تفصيل أو التطبيقات العملية لإعداد خطة أو ميزانية أو استراتيجية. لو تخلون أساميكم عند الأخ سامي على أساس يعني وشنو الأمور اللي أنتم مهتمين فيها أكثر فنقدر نخدمكم يعني أفضل في المستقبل إن شاء الله.
Okay, so we're now going to go into the fourth of the 4 sessions. So this is the last of the 4 sessions that we put together as part of this program, okay? And this is going to be, again, at a different pace, at a different level, because what we are talking about here are the organization's processes. And so we're going to get into some level of detail, but I don't want to get lost in the detail either, okay? So what we're going to do is just kind of give you a quick overview as to this whole notion of process. And I want to finish on this notion, the idea of data. Okay, I want to finish on this idea of data. So if you look at why processes are important, okay, and I should just tell you, in case you're wondering, I have been researching this area of process and process management for the better part of, I don't know, maybe 15 years, maybe more. So I know a little bit about this area of process and process management. But this quote that I've put in front of you is from a friend of mine who's from Canada, actually, Roger Bolton. And I thought this captures this notion of process really well, okay? This is one definition. There are many, many ways of defining processes. But I thought, let me start here. Because really, the processes in your business are what people refer to. They are the engines of your business. They are what make your business happen, okay? So you need to understand what these processes are. The question is, where do these processes come from? How do you determine what processes you're going to have in your business? How do you determine whether your processes are efficient or inefficient? How do you determine whether your business is operating properly or not operating properly? But feedback, and absolutely, feedback is really important, but where is the feedback coming from? Yes. 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 So you can ask your customers for feedback. You can ask the people that you're working with for feedback, and you need to understand the processes. You need to understand the procedures. Yes, you need to believe that these are the right things. Okay. So what I want to do, yes, from your staff as well. Absolutely. Absolutely. So you can ask your people. You can ask your staff. And very often when we talk about processes, what we also need to do is we need to think about what perspective are we taking. And what I want to suggest to you is processes are really important, but they fit within a cycle. And part of what I want you to understand is the cycle of how processes fit together based on the conversations that we had yesterday and some of what we've been talking about today. So yesterday we talked about strategy. Yesterday we talked about markets. We talked about sales. So if you look at that center circle there, that center circle really captures what we were talking about yesterday. We're talking about strategic sustainability. It's not just having a business for a month or for a year. It's having a business that can last over a period of time. As we said yesterday, most businesses take about 8 to 10 years to truly get established. So we're talking about being able to sustain your business over a period of time. So the question then becomes, how to write a process. Does anybody know how to write a process? But you will by the end of today. Okay. We'll talk about whether you can write a process by the end of today. Because you're right, part of understanding processes is knowing how to develop a process. And part of what I want to get you to think about is how you go about doing that. So that's exactly what I want to do. So it starts with stakeholders. If you want to write a process, you've got to start with stakeholders. And I'm going to define what I mean by stakeholders in a few minutes. These stakeholders have expectations, and you need to understand what these expectations are. And I'll tell you a little bit more about them. It's the expectations that create the processes. Part of what you need to do when you're thinking about writing processes is you need to think about what expectations are these processes and these activities meeting? And I'll talk a little bit more about that. And then you have your products and services. And your products and services are delivered by your processes, are delivered through your processes. So in a way, what I want you to think about when you start thinking about processes is processes which sit at the bottom because they form in some ways the foundation of your business. Those processes, on one side, they meet the stakeholder expectations, and on the other side, they deliver your products and services. So processes are very important in your business, okay? They are very important in your business, and yet most people and most entrepreneurs give very little time or thought to their processes. So let me explain what I mean by stakeholders. The next few slides, I'm basically going to have a quick look at some of the words in these circles, okay? Stakeholders. So stakeholders are things, are people outside your business and inside your business. And what I want to kind of get you to think about before you go anywhere near a process is to think about your business from the outside looking in. I want to start from outside the business and I want to come into the business. And every business has a very large number of stakeholders, and I'll give you some examples in a moment, but they have a very large number of stakeholders, of which the customer is usually the most obvious one. But actually, once you've got your list of stakeholders, you need to start putting some priority. Which is the most important stakeholder? And believe it or not, in some businesses, the customer is not the most important stakeholder, even though every textbook or every book or article you ever read will say the customer is queen or the customer is king. But actually, if you're a pharmaceutical company, certainly if you're an ethical pharmaceutical company, in other words, your medicines can only be given with a prescription, then you don't know who the patient is at all. Because if you're an ethical pharmaceutical company, you cannot sell directly to your patient. Actually, the most important stakeholder to an ethical pharmaceutical company is the regulator and the doctors who are doing the prescribing. You see, not the patient, not the person who's actually taking the tablet or swallowing the medicine. They don't actually feature, believe it or not. Can you see? So I just want you to think about who these stakeholders are and put some priority on them. So if we go to the next slide, these are some examples, okay? And this is not the full list of stakeholders. These are just some stakeholders. So customers, suppliers, government departments, regulators, I mean, all of those and more. And very often, when companies, small ones, big ones, it doesn't matter what size, but I'm talking about entrepreneurial companies. When you start thinking about your processes, the temptation, and you start writing processes, the temptation is to look inside your business. And I want to suggest to you that's not a good starting point for writing processes. A much better starting point for writing processes is by starting outside the business, by starting to think about your stakeholders, particularly the ones who are outside the business. So in this case, it would be customers, suppliers, government departments, financial supporters, banks, those sorts of people. So here's my first question to you. When you're starting your business, which stakeholder is the most important and why? Okay? So I'm going to give you a few minutes because I'm conscious that we started this session a little bit after. So I'm going to give you a couple of minutes. Talk to someone next to you and think about this question. For your business, which is the most important stakeholder and why is this the most important stakeholder? I'll give you a few minutes. Important stakeholder in your business, do you think? Employees. Okay, employees. Customers here. Customers. It depends. The investors might be the most important. I heard somebody say suppliers. Suppliers. Okay. Customers, yeah, decision maker. But so that's the entrepreneur. Okay, so you're saying you're the most important. Yeah, I can see that. But if you're starting outside the business, because you're inside the business, go on. The people who are providing finance, so the banks or the investors. Can you see? All I'm saying is, all together. Yes. Absolutely. No, I asked you to choose one. I asked you to choose one. Absolutely. Absolutely. Yeah. So you're right. There are many many stakeholders, and every organization, every business has many stakeholders. The key thing is to prioritize. Which is your number one? Which is your number two? Which is your number three? And likewise, you need to understand where you are going to focus your effort. Because whichever stakeholder you make the most important is where you, as the owner of your business, where you as the entrepreneur are going to put your effort. That is where you're going to put your time. So think about your stakeholders, okay? That's what I want to kind of get you to do as a start. It depends on the business, but yes. Agreed, but whatever your business. So that's why. Yes. Yes. But equally, whatever your quality of your service, you need to think about who your stakeholder is. Yes. Who is buying your service? Who is using your service? You've got to think about who the stakeholders are. Well, if there is no, okay, here's one. If there's no license, there's no customer. Do you see? Yeah. Yeah. Agreed. So all of them are stakeholders, but at different stages, different stakeholders may well become number one. My question to you is, if you don't have a full list of who these stakeholders are, and if you don't have a plan for how your business is going to go, how are you going to know when to prioritize which stakeholder? Can you see? So that's why your plan is really important. That's why your strategy is really important. That's why your budgets are really important. Because if I come back to what I was saying a few minutes ago, if you don't get your license, you may never have a customer anyway. If you don't get your suppliers, somebody mentioned suppliers, if you don't have the right suppliers, you may never get to a customer because you don't have the right products. Your quality may not be as great. So all I'm saying is stakeholders, okay? Remember this. Satisfaction. Yeah. Yes. 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 They get more done. Yes. Absolutely, which is why each of your businesses is different. And therefore, each of the stakeholders for your business is going to be different, which is why I am not saying one stakeholder is more important than another. It varies by your business. There is no predetermined ranking. The ranking will vary depending on your business. So, absolutely. For the stakeholder. Excellent. Let's move to the next step then. Yes, ma'am. Hmm. Yes. Yes. Absolutely. So the stakeholders vary and the priority of the stakeholders change depending on what phase of the business you're in, where the life cycle is of your business. If you're just starting out, it's one set of stakeholders. When you're running your business and growth phase, it's another set. Exactly. These stakeholders they don't stay the same. They're changing. The priority is changing. And part of what you as an entrepreneur need to do is you need to understand those changes of priority in your stakeholders, okay? Let me move on to expectations. These stakeholders have expectations. They want things from you and your business. Now, some people confuse me, okay? They confuse me because they say, what is the difference? If you look at all the words on the outside and inside, but if first look at the words on the outside, starting at the word right at the top, in English it's wants. What does the stakeholder want? If I go around in a clockwise direction, what does the stakeholder desire? What does the stakeholder need? What does the stakeholder wish for? What are the stakeholder requirements? What are the stakeholder demands? What are the stakeholder obligations? What are we obliged to do, maybe by law? What is it that is adding value? I don't mind what name you give it. I'm calling all of those things expectations. And these expectations are really interesting, okay? These expectations are really interesting. So let me give you an example. Okay, let me give you an example, right? If you go into a retail shop, and you decide you want to buy some clothes, whatever the clothes are, what are your expectations when you go into a retail shop? Quality, price, service, sizes, yes, a range of sizes, yes. What else? Range of colors, range of materials. It should be up to date and fashionable. Go on. What else? What else? When you walk into a clothing shop, do you want to walk in and think, oh God, I'm so cold? Do you want to feel like that? The atmosphere, the environment in the shop, right? You want a nice environment. You don't want to walk in a shop and you think, I better take my phone and put the flashlight on to be able to see the colors. Can you see? So that will depend on the range of, do they have heavy clothing or light clothing based on, but inside the shop, you want a nice environment. You want it to be pleasant. Can you see? So you have all these expectations. So here's my question to you. If you are running that shop and you have, I'm making the numbers up just to illustrate, okay? If you have 500 KD, what are you going to do with your 500 KD? Are you going to invest in a wider range, sizes, colors, fabrics? Are you going to invest in a better air conditioning system to make it more pleasant inside? Are you going to invest in some training for your staff so your staff give a better service? Are you going to invest in giving a 50% discount, so that customers come in thinking they're going to get better value? Where are you going to put your 500 KD? Can you see? Oh, hold on. Depends on the priority and needs of your own business. I can divide. So here's what happens, right? Here's what happens is these stakeholders and their expectations are really important, because when you're making a decision on where to spend your money, right, you've got to understand the priorities to your business, but more importantly, you need to understand the priorities to the customer. What matters to them? Because if what matters to them is price, because somebody said price matters, then maybe what I need to do is put this £500 into giving everybody a 50% discount. If what matters to your customers is quality, then maybe what I need to do is pay my suppliers the 500 and say, I'm giving you this extra 500. You make sure you improve the quality of what you give me. Can you see? These stakeholder expectations are really important, because very often our investment decisions and decisions that we take generally they should be driven by what our stakeholders want from us. And very often that doesn't happen. We take decisions, we put money into our business because that's what's comfortable for us, rather than that's what the customer wants, or that's what the government department wants, or that's what the suppliers want, or that's what somebody else wants. So partly I want to get you to understand expectations so that you can start to think about what and how that means. If I can now go to the next slide. So what I'm going to ask you to do is I'm going to split this room, if I can, in three, okay? So so you see this dividing line here, yes? So everybody on this side, have a think. If you're a customer in a restaurant, what are your expectations and which one is the most important, okay? I'm going to ask everybody over here, if you're a passenger on an aeroplane, you're about to buy an airline ticket, yeah? So what expectations do you have when you're buying an airline ticket, and which one is the most important? And I'm going to ask people on this side to think, if you're buying a mobile phone, what are your expectations and which one is the most important? I'm going to give you a couple of minutes and then I'm going to ask you, all right? So have a talk or think about it with the people next to you, and then we'll talk about it together. Okay. Should we start? Clearly, this is getting people a bit. People are getting really into this. Okay, let's make a start. Let's make a start. So, go on. Let's. You're which group? This is mobile phones. Okay. 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 Listen to the customers. Yes. Okay. What do you want? What are your expectations when you buy a mobile phone? Memory, quality, weight. Yeah. Yes. And good camera. Okay. Yes. Size. Yeah. Go on. Screen size. Yes. Any others? The camera, yeah, the cameraman says the camera is important, yeah. Okay. Durability, I have to tell you, I've broken the screen on 3 phones. I mean, durability is important, right? I was at a broken screen for 3 months simply because I didn't have the time to go and get it changed. Okay, any more on mobile phones? All right, I'll come back to you in a minute. Battery life. Oof, very important. Yeah, battery life, very important, very important. Okay, thank you. This group here, airlines? Start from up, yeah. Go on then. Flexible schedule, timing, yes. Timing of takeoff or timing of arrival? Timing of takeoff. Would you want your flight to be half hour early taking off? No. Yeah, exactly. Yeah. I don't mind half hour early at the other end, but not half hour early taking off because I'll always miss the flight. I'm usually the last one on. But timing is important, right? Okay. How many pieces of luggage? Yes. And the weight, safety. The price, the crew, the service you're going to get, the meals, is it direct or are there lots of stops? Can you see the meals you're going to get? And the more services, the video, the movies on the flight, yeah? I tell you, it's got to a point now, I'm doing so many flights that actually I've seen all the movies. It's really bad. Yeah. Flexibility in terms of the tickets. Can you change your ticket? Excellent. Thank you. And this group here, restaurants. Menu. The chef. Who's the chef? Yes. The customers, yeah. Who else? What else is important when you're choosing a restaurant? Quality of the food, the quality of the services, the delivery. Do they deliver to your home or not? Hygiene, very important. Yes. The timing, yeah. The location. Yes. Parking. Can you get parking nearby or not? Right? The taste. Nobody's mentioned taste. It's inside the quality of the food. It's inside the quality. The good recovery. Vegan is high quality, but the taste. Oh. Yeah, exactly. One at a time. Yes, the design. Yeah. The kitchen smell gets into your clothes, it gets into your hair, you think, ugh. It depends, yeah. Yes, yeah. Okay, so one last one. The environment, not very high sound. You don't want loud music if you're trying to talk and that sort of stuff. Okay, so you've all looked at 3 different sectors, okay? You've looked at the expectations of the stakeholders, right? And here's the thing. Over here, I heard things like size, weight, camera, battery life, durability, yes? Over here, I heard things like service, safety, food, scheduling, flexibility, timing, okay? All of that. And over here I heard quality of the food, quality of the ambience, the type of menu, the extent of the menu, the chef that's making your food, all of these things, right? Can you begin to see that when you have a limited budget, when you have a limited amount of money, actually it is almost impossible to deliver every expectation. And actually, some of these expectations conflict, right? So yes, I might be able to get all my flights arriving and departing on time, but actually, I may not be able to do the flexibility of scheduling. Actually, I may well be able to get high qualities of service and maintenance, but every time an aircraft is in maintenance, it's not in the air taking passengers. So maybe I won't have enough planes to kind of have the choices of where you go. Maybe with mobile phones, I can give you a really good camera, but I'm going to have to charge you another 50% on top. Hang on a minute. Maybe not. Maybe I don't want to pay that much. Maybe I don't want the camera anymore. Or maybe I can, in a restaurant, we can give you, if you want hygiene and you want hygiene to, food to come out, which is not going to give you food poisoning, maybe I can't give it to you at the cheap price that you want. Maybe I'm going to have to charge a little bit more. Maybe I can't give you parking, because if I invest in buying another 10 parking spaces for you to have for free, I can't invest in the hygiene. Maybe it's one or the other. You need to understand stakeholders' expectations, firstly, because there is a wide range of them. Secondly, no industry, no company, big or small, can meet all of their stakeholders' expectations 100% of the time. Because there isn't enough money to be able to do that. There are choices that need to be made. And part of what I want to kind of get you to do, and entrepreneurs, some can do this intuitively, but actually very often you need to stop and think about this. Which of these expectations of all my stakeholders are the ones that are most important to them? And if you're talking about an airline, for example, I think we would all agree that it doesn't matter how late the airline is, it doesn't matter how bad the movies are, it doesn't matter how rude the staff is. What matters more than anything else to all of us? Safety. I don't mind about the taking off bit. I just want to make sure I land. It's the landing bit that's really interesting for me. Can you see? So don't tell me I've got a ticket and I've saved 10 KD or I've saved 100 KD. If I don't land at the other end in one piece, that savings doesn't mean anything to me. Can you see? We all agree, I'm sure, that when it comes to food, if the ambience, the smell, anything, but none of us want is to go to a restaurant, eat there, and find we're spending 3 days in bed with food sickness. Can you see? So hygiene is really important. So part of what I want to kind of get you to think about is in every business, there are some core things that we have to meet. So expectations, your customers, not just your customers, your stakeholders' expectations, because we have said already that the stakeholders will vary at different times, at different points in where your business are. Who the number one stakeholder is going to change. So not only do you need to understand which is the most important stakeholder, you need to understand what is that core, what are the core expectations we have got to get right for my business. And the answer to that question is going to be different for all of your businesses. Okay? And you need to think this through. If we go to the next slide, please. So here is where are we? Which one are we? Okay. Okay, I'll ask you to, I'm not going to kind of get you to discuss this, but what I would ask you to think about, okay, what I would ask you to think about is, think about a situation where you've gone as a customer, you have gone into a business, or you have had some dealings with any business. I don't need to know the names because it's on camera, right? So I don't want to get anybody to get sued here. But think about it where you were really dissatisfied with that service or with that company. Okay? Think about where you were really dissatisfied with that company. And you think about that, actually what you will think about is that company did not meet one of your expectations at that moment in time. Whatever the expectation was, they didn't meet it. And I'll give you one example from mine very recently. When I was coming here, I was in Mumbai in a hotel. And the taxi was booked to get me to the airport at 4 o'clock in the morning. So just about 4:05, I went down to get into my cab. When I got downstairs, the reception told me, the taxi is on its way, just wait a few minutes. Okay, I've still got a bit of time. So I waited. It then got to 4:15 in the morning. There was no taxi. It then got to 4:30 in the morning. And now I'm starting to get a little bit agitated because I don't want to miss this flight, can you say? And so now I am going to the reception, and where at first I was quite polite, you know. So when is this taxi coming? Tell me, go on, give me some insight. How long am I going to be waiting? By 4:30, it was a different story. By 4:30, I am feeling a lot of stress here, okay? I need to know when this taxi is coming and why this taxi is late and where, yeah. So the guy tells me, the taxi's behind the hotel. The car is behind the hotel. I said, I'll walk to, exactly, but I won't tell you what I was thinking, right? What I was thinking can't be published or can't be said in polite company. My response was, if the taxi is in the back of the hotel, I'll walk to the back of the hotel. I just want to get into the cab and move. Clearly, the guy is lying to me. Right? You see, the person is not telling me the truth. It's obvious there is no taxi in the back of the hotel. It's now 4:45, okay? It's 4:45. My intention is to be in the airport at 5. And traffic in Mumbai can be very, very dodgy because it's so crowded. Even at 5 o'clock in the morning, you can get stuck in a traffic jam, depending on what road you're in, because it's just such a big city, so busy. 4:45, the driver walks past me. And it's very clear that he has only just got out of bed. Because you can see the sleep in his eyes. You can see that he's kind of washed his face and he's walking around half dazed, can you see? Now I can assure you that that hotel did not meet my expectation. So we all have those situations. And so the question becomes, why do companies, why does any business not meet its stakeholders' expectation, right? You've got to ask that question. Why wasn't this hotel able to get a taxi at the front door at 4 o'clock in the morning, as they had said? And the reason is because they are not very good at putting the right process in place. If I could ask you to go to the next slide. So what I want to do, I give you this as a template that you could possibly use at some point, okay? So you can say, that's my customer. Oh, I'm sorry, I'm on that side. That's the customer. This is the expectation. And now you can start to say, what's the process? And in this case, the process was organizing a taxi to take someone to the airport. Process. And if you don't get a handle on what your process is it any wonder that customers or government departments or banks or whoever your stakeholder is going to be dissatisfied because they want something from your business and you are not giving it to them. So you need to understand the expectations of your stakeholders, and then you need to line up, you need to align what you are doing to those expectations. So in this particular case, if customers, and you talked about from a retail point of view, if customers want a wide range of products, then you need to make sure that you have a stock of products. You need to understand what is it you're doing to understand what that range is, what colors, what sizes, what fabrics, which fashions. Those are the things you need to do. Those are the processes you need to put in place to meet that expectation. So processes, when you're writing processes or defining processes, processes are not something that you just put on paper with boxes and charts and lines and arrows, which is usually how processes are defined. Processes have a very particular purpose, and their purpose is to deliver a stakeholder's expectation. So, let me move this on a little more. When you're analyzing your business process, if you want to look at your business processes in some detail, here are some of the things I would suggest you need to do. Some of this draws on what we talked about yesterday. So this is not new. I'm not asking you to start from a clean sheet of paper. Yesterday we talked about markets. Yesterday we talked about marketing. We talked about what is your segment, what is your target segment. We talked about understanding what your products and your services are. So you need to understand your market. You need to think about what is it that's adding value. Do you remember? Going north, going west, the going north bit. What is it that truly adds value to your customers? Is it giving them a range of movies? Is it giving them a good quality ambience or a good quality restaurant in terms of the decor? Is it the weight of your mobile phone? Is it the camera in the mobile phone? What is it that is of value to your customers? What is your relationship with your stakeholders? Do you work closely with your suppliers? Do you work closely with your customers? So you need to understand these things here, right? What's the scope of your business? And when you get into processes, you cannot do processes at some high level. You really need to get into the detail of your business. So I give you on there some questions that you should be asking. Why do I have this process? You need to answer the why question. Your why question is answered by understanding your stakeholder expectation. But who is going to do this process? How is this process going to be done? What is this process? What needs to be done? When does it need to be done? And if I come back to my little hotel example, they book taxis to take people like me to the hotel on a daily basis. You would have thought that for a hotel, this is standard, right? This should be just happening on a regular basis. But something went wrong with this process. Somebody didn't know what the job was. Somebody decided, I'm going to completely ignore the process. I'm going to completely ignore this. I'm just going to keep sleeping, even though I know I should be awake to go and drive the customer. So you really need to get into the detail of what the process and the processes are in your business, and the backup as well. And each of the processes in all of your businesses will be different because your businesses are different. So, if you wanted to buy a can of chickpeas, does everybody know chickpeas? What are chickpeas in Arabic? Yes, the one that makes hummus, right? If you want to buy a can of chickpeas, would you go to a hospital? No. No, you wouldn't go to a hospital, would you? Why? Why? Because what the hospital does is it fixes people who are not well. Likewise, if you break your arm or dislocate your arm or hurt your arm, would you go to a retailer? Would you go to a grocery store and say, please fix my arm? No, you wouldn't, would you? Because different companies specialize in meeting different expectations. If you went to a grocery store and said, please fix my arm, they would say, don't come to me, go to a hospital. We don't meet that expectation here. But if you want a can of chickpeas, we can let you have one of those. My question to you is, for your business, what are the expectations that you specialize in? What are the expectations that you do really well? Okay. What are the service characteristics that make your business different to other people? Do you remember yesterday I was talking about unique selling points? Those unique selling points are not something that you think about out of your imagination, although you might do, but those unique selling points are actually the mirror of your stakeholders' expectations. I just want to tie things together from what we did yesterday. The last bit I want to talk about here is use of technology. And I know that during the break, some people were talking to me about technology, information, and data, okay? Processes are really important when it comes to data. If we could move on to the... And I really want to spend the next few minutes that we have really focusing on this issue of data, okay? So, how do I do this? How do I do this? If I said the phrase information technology, everybody understands it? Yes? IT? Yes? IT? Okay. If you have a piece of paper, or even if you don't have a piece of paper, can I ask you to write on a piece of paper the letters I and T, which is a short form for information technology. Have you IT? Just write I and T on a piece of paper. Any paper, doesn't matter. You should have a piece of paper in your you should have a pad in your writing pad. Excellent. Or if you've got a notepad, just write it on a just I and T. Perfect. That's the one. Yes, everybody there? You're thinking, why is he asking us to do this? I have it in my head. I don't need to write this down. Okay. I'm almost sure, if you've done it, that's great, but don't worry. If it's in your head, that's fine. I'm almost sure that what most people did is they wrote the I and the T roughly the same size. Yes? You wrote the I and the T roughly the same size. Can you see? It should be. Exactly. So here's what happens when businesses come into contact with IT. The I becomes really small and the T becomes really big. Because everybody wants to focus on the technology. Everybody wants to focus on the system. What system am I going to get? Is it going to be an ERP system? Is it going to be a POS system, point of sale? Is it going to be a CRM system? Is it going to be an HR system, a finance system? What's the system? And I've worked with companies, big ones and small ones. Okay, I've worked with companies of all sizes. And they get so caught up in the system that before you know it, they have brought in the vendors, the people who have the systems. They get 5 of them to come in. They say, tell me what your system can do. And vendors, IT companies, I've got to be careful, I'm on camera. They are very good at promising all sorts of things. Our system will do this and our system will do that. And you say, but can your system make toast? They go, of course it can. Can you see? Can it make hummus? Yeah, of course it can. It can do whatever you want it to do. Because they're there to sell you something, right? And that's right. That's their job. There's nothing wrong with that, okay? But what happens is companies then buy the system. They then try to implement the system. They implement the system. And then the people who are using the system say, that's a really good system, but it doesn't give me the information I need. It doesn't give me the information. You remember that I, which was so small? It doesn't give me the information I need. So we end up with this system, and we don't end up with the information we need. So what I want to do is I want to kind of get you to think about this thing. I want you to get you to think about this thing called data, okay? Am I on this slide here? Importance of data? Yes, okay. I want you to understand the importance of data. Everything your business does is around data. How well you manage your data is absolutely critical to your business. And the processes that you have in your business, they are bringing data in, they are using the data, and they are putting other data out. There's this notion of input, process, output. But what is coming in is data. You are using that data, and what is going out is data. And you need to understand for your business, and it will be different for each of your businesses, because every one of your businesses is different. That data is really important, okay? So, bless you. So, customers, as I've discovered, or as I've explained in my little hotel example, customers come into contact with your processes. If the data isn't there, it affects the processes. It affects the customer experience. So when I ask the guy behind the counter, where is the taxi? I'm asking him for some data. I'm asking him for some information as a customer. He tells me the taxi is in the back of the building. See, that's, yeah, exactly. That data is false data. You see, he would be better off saying, to tell you the truth, sir, I have no idea. I don't know. But we don't say that, do we? We make it up. Processes are important and data is important because everyone can be positively or negatively affected. Regulators are really powerful people. They can close your business down if you don't give them the data they need. There are some businesses, both I'm sure here in Kuwait, but certainly overseas, if you don't submit the information that the regulator wants in the format that they want, in the time that they want it, they can come in and close your business down. Data is really important, and that data is in the processes that are in your business. Whether you meet your business goals or not depends on the data. If you say to your customer, I will deliver you my product or my service day after tomorrow in 2 days' time, and you don't know where the supplier is in when they are going to send you the product you need, if you don't have that information, if you don't have that data, you could be promising something to your customer that you can't deliver because you don't have the data of what your suppliers can and can't give you and when they're going to give it to you. So this notion of data, I cannot even begin to tell you how important it is to your business. And yet data is probably one of the least well-managed parts of any business, big or small. And what I thought I might do just to run this session off is just take you through this notion of big data, because everybody's talking about big data these days. But equally, so partly I want you to kind of just be aware of what people mean by big data, but also, in addition to big data, small data is also important, because very often we need to take decisions based on small amounts of data. Not everything has to be big. But because there is this notion of big data, I thought I should share with you some of the findings from some research that I've done with some of my colleagues. So the first notion is, what is big data, okay? And I put this up as a infographic from IBM, which goes, partly it's just to say we live in a world of data. Think about whether it's WhatsApp, or think about whether it's Facebook, or whatever the platform is. There is so much data around. Go into Google, type any word, virtually any word, and you will get thousands of hits, thousands of things written about whatever that topic is. There are huge amounts of data out there. So the question becomes, for your business, how do you get this data? What data do you use to help you in your business? Okay, so that's where I kind of want to go over these next few minutes. Because sometimes finding the right have you heard this phrase, a needle in a haystack? Yes, where you're trying to find one small thing in this. Absolutely. So trying to find the data and trying to find the right data can sometimes be a needle in a haystack. And so partly what I want to kind of get you to do is think about, how do you actually navigate this haystack? How do you get around this, okay? So if I go to the next. So when people talk about big data, then actually what they're very often talking about are these sorts of variables going around the side. These variables are what make up big data. So things like, if I start on volume, is volume on that side there? Where's that side there? Okay. Volume? Volume is here, right? Okay. If volume is here, then it matches my slide. So if you have a large volume of data, so increasingly companies are saying, just relying on the data we have in our company is not enough. Maybe we need to go outside and look at what is on the internet, for example. So you have companies that are looking at the data which is not just in the company but outside the company to help take a decision. So the volume of data is going up. The variety of data. If I'm targeting if my target market, and I just use this as a continuous example here, if my target market are women who are aged between the age of 20 and 25, then there are lots of areas, lots of places I can go to look for that information. So the variety of sources of data are become really important. The speed, the velocity, the speed at which the data is changing is very fast. Because data is being updated, systems are being updated on a very regular basis. So understanding what that is, the variability of the data. So understanding how this data is moving over time is very important. Veracity is about the truth. How accurate is this data? So if you want to know about this segment of the market, women between the ages of 20 and 25, where all can you go to get this data? When you search on Google, there might be 50 sources that have this information. How do you know which source is the most accurate and the right one? So part of what you've got to do is understand the veracity. Being able to visualize data. Now, some people are very good with data. So if you put an Excel spreadsheet with many columns and many rows, they can make sense of it. But actually, it's very difficult to visualize. So sometimes having a picture, like a bar graph or a line graph or a scatter diagram or a pie chart, being able to visualize the data is also a very useful thing to do. And then what is the value of this data? Okay. How do we turn this data into something that can be helpful to our business? So I just kind of want to get you to think about variability. Variability. Yeah, variability. So if you look at how businesses kind of deal with this, there are three broad things that businesses need to start to do, right? First is you need to understand the data that is important in your business. So if you're talking about customers, what data is important in your business to know about your customers? Do you need to know their names, their addresses, their age? Where, do you need to know what their job is? What information do you need about your customers? So what information do you need about your products? Do you need to know beyond just the product and the price? What else do you need to know? So in a food business, for example, knowing what the expiry date is on food or knowing the date the food was manufactured is really important because that will determine whether you can use that food in your process of making whatever it is you're making. So you need to really stop and think about what data is really important to your business. And the way to understand that is to understand the processes. What is it that's going on in your business? Therefore, what is the data that's needed? So if you're running a restaurant, for example, you might say, well, expiry date. So if a food has an expiry date, you need to know what it is. Increasingly, if you're running a restaurant, you need to know whether the food that you're buying, the raw materials that you're buying, was it in a factory or was it produced where nuts were being used? Because very often people have a nut allergy. I don't know if you've come across this, but if someone has a nut allergy, then it can cause them to die if they come into contact with nuts. A very sad case in the UK. So you need to know the sources. The ingredients. Is it organic? Yes. Exactly. But in a very sad case in the UK is this young boy in school, 12 years old. He had a nut allergy. And these other children, also in school, decided that what they were going to do is they were going to play a prank, play a prank, play a game, right? But not a very nice game. They decided they were going to throw food at him. But the food they were throwing at him were nuts. And whilst he defended himself, he put his hand up in front of his face, some of these nuts hit his face. Regrettably, this young boy passed away within 3 hours because he had a nut allergy. So understanding what the ingredients are, where this food has come from, if you're running a food business, I would say this is really important. You see? So you need to think about what is the data that's really important to your business, okay? Then analytics, which is the second point down, is there are lots of tools now for how you analyze the data. Some of these analytic tools rely on statistical analysis, so it helps to understand what those are. And then, so you can do also, yesterday we were talking about algorithms. Yesterday we were talking about the sources of competitive advantage now being around data and algorithms. So understanding the algorithms, understanding how you're going to analyze this data is important. And finally, the tools. For tools, read technology. This is the T in your IT. What tools are you going to use? But you start with the data, and then you go to the systems. You start with the data, then you go to the technology. Okay. So if I go to the, I put this up because it seems to me that this is where most of the effort goes. For most organizations, big ones, small ones, particularly entrepreneurs, right? Usually we get so caught up with that bottom section. We get so caught up with that bottom section, which is about the technology and the infrastructure and how it's all going to work, that we don't always think about, well, at the top is the strategy. Is all this technology and the systems and the tools and the analytics, is it really helping us to achieve our strategy? And very often we end up being so caught up with this stuff at the bottom, we kind of forget that actually we're here in business to achieve some targets, to achieve some goals, to achieve the mission of the company, which is what we were talking about yesterday in terms of strategy. So I'm just trying to ask you to think about where you put your energy, where you put your effort. Okay. And I would suggest you need to put your effort into understanding the information and the data and how that lines up with your processes and your strategy. And I thought I might come towards the close of this session by giving you a little case study, okay? This is a case study, give you a little case study. So this is based on some research that some colleagues and I have done looking at big data. And in particular, if I could go to the next one, the question, the reference is in the thing below. In particular, looking at centers of innovation. Where in Europe are the centers of innovation? Okay, and so if you're trying to find out across 28 countries, where are the centers of innovation? Which cities, which regions are the most innovative? Then you've got to gather a lot of data to understand and answer that question. Where are the big centers of innovation? Okay. And so through the research, we identified a set of variables. If I could go to we identified a set of variables for what does innovation mean? How would we know where these innovations are? What are some of the indicators? What are some of the variables that we need to determine what is innovation? And if you look in most places, innovations are very often in conjunction with universities. Very often innovations come out of universities, come out of research being done in universities. So innovation also comes from companies. So how much, if you look at number 5, then innovation is about R&D. Where are companies spending on research and development? That too will be an indicator of where innovation is. So we came up with this list, and then we started to say, what are the data sources? Where do we find the data sources? And so we started to look at all sorts of databases. We started to look at all sorts of places where we could find data on those indicators. And again, I just give you these as some examples, okay? So we went to a number of different databases, a number of different sources to find this data. So whether it's looking at the European Union and what information they had, in the academic world, you may have come across a thing called the Web of Science, which has a record of all the publications by academics. There is an investment monitor report, i.e. where are investments being made? Regionally, where are investments in R&D being made? So there are lots of different sources that you can go to find out about what is important to your business. Okay? And having got all of this, having got all of these data sources, we then started to say, actually, a lot of that data is in different formats. The data itself is in different formats. So we started to say, how do we actually start to standardize the formats? How do we actually start to understand what this data is? So we, again, set up some criteria and started to make this happen. And the next bit, which I won't bore you with, was to then do the analytics, was to then create the algorithms, the formula that was going to take all this data and analyze it, crunch it, in order to come with something which was meaningful. And for that, you do need some mathematical, statistical skills. I won't deny that. Okay, see, there is a need to understand specialized people to understand how to analyze the data. So you need to have, either you have the statistical skills, or you need to find someone that does have some statistical and analytical skills. So that was quite important. But what we ended up with, if we go to the next slide, Nuv, was when you look across, and now what was interesting is what we discovered was actually, while we were looking initially at the EU, at the European Union, actually what we also started to discover is that based on the data, there are some centers of excellence for innovation outside of Europe, unsurprisingly. And whilst, this is a way of visualizing all that data, because there is so much of it, you need some way for human beings to go, oh yeah, I can see how that works. But what you begin to see are some obvious examples of where centers of innovation are. So you would expect to see San Francisco right in the middle, because that's where Silicon Valley is. You would expect to see places like New York. You would expect to see places like London or Paris. But what's really interesting is you end up with some really interesting places, like where is it gone? Hyderabad, Bangalore, Helsinki. Can you see? All of a sudden you think, wow, these are centers of excellence for innovation. And what you also begin to see are where the links are between these centers of excellence of innovation. So where you see lots of lines coming into one particular place, that means there's an awful lot of activity going on there. Where you see, take Pune, right in the top right-hand corner. That's a city in India. You see that there are very few lines there. It is a center of excellence, but there aren't that many lines of activity. relative to, say, San Francisco or even Bangalore or Chicago, you begin to start to get a picture of where these centers of excellence are. So what I want to get you to think about when it comes to data in your business, okay, is I want you to think about these 8 things. I want you to think about what's the question you're trying to answer. What's the question you're trying to answer? Before you go anywhere near the data, before you go anywhere near the systems, what's the question? And maybe there are more than one question. But you've got to start with a question. Then you start to say, now let me choose the data. Now let me choose the databases. Now let me start to think about how I'm going to answer that question. How am I going to source this data? Where do I look for this data? If there are multiple sources of this data, how do you integrate it? How do you amalgamate it? How do you bring it together? How do you then analyze this data? What tools do you use to analyze the data? And then how can you visualize this data? How do you make it a representation that people can say, that you can say, I can see the story, I can see the picture that's emerging, so that you can then take some decisions and then clearly implement whatever the decision is based on the data that you have chosen. So I give you this 8-point step just as a way of starting to think about how you make this happen. And given that this session was all around processes, if I could go to the next slide. So based on the research, based on what we did, so this is typically what people would say is a process map. It's boxes with arrows and lines connecting them from one place to another, okay? And really what this process map is starting to show is if you are going to analyze data, if you are going to use data in your business, then these are the stages of the process that you need to go through. That's not to say you have to start at the beginning and work all your way through. Typically, when people are using this, they could have multiple starting points, and then you work your way around this process. But what matters is that when you're talking about data, you need to make sure that that data is, and recognize that that data is in a process in your business. You need to recognize that that process in your business is meeting an expectation of some stakeholder. In other words, you need to make sure that the data is tied into the expectations of your stakeholders. So where we started this whole session was I said, who are your stakeholders? What are their expectations? All that is quite high level. When you get into data, it's quite low level. It's real detail, name, address, and even the address. The address is made up of a street number, a street name, then a town, then a city, then a country. So that you're into real detail here when you get into data. But whatever that data is, it has a value. And the value is that it helps you to meet a stakeholder expectation. So what I wanted to kind of do is just give you an idea of this notion of process and data. I'm going to, which is the, on a keyboard, it would be B, that one. Let's see if it works. Yes, it does. Okay, so here is the short summary. Okay, here's the short summary. When we started yesterday, we were talking about this whole notion of entrepreneurship, okay? And the early part of yesterday was really just to kind of get the conversation started. What is an entrepreneur? What do entrepreneurs do? What are the key things entrepreneurs need to think about? Then we started to think about strategy. What's the strategy of the organization? Why is strategy important? What are the mission and values of your business? Then we went into markets. What's your market segment? Then we talked about sales. How do you actually generate sales? How do you put targets in place? How do you make sure that those targets actually are followed through? Today we were talking about finances. And those finances and the financial statements incorporate your strategy. They incorporate your markets. They incorporate your sales plans. That's what leads you to the financial plans. And then, today, in this last bit, we started talking about the operations of the business. Day to day, the operations of the business. And the operations of the business, the processes in your business, need to be designed based on your stakeholders, which come from your marketing plans. The operations, the processes of your business need to be designed to fulfill your strategy and your objectives that we talked about yesterday. These are not separate things. These are integrated things, even if we have talked about them over 2 days. Data and systems are core to your business because that data helps you to meet a stakeholder expectation, which helps you to meet your strategy, which fulfills your marketing plan. So all of these things are connected, and part of what we wanted to do is just give you an overview in the time, because time was very short. And as Noof will have said at the start, any one of these things, if you want to apply it for real, takes this is like an iceberg. If you think about an iceberg, you just see a little bit above the surface of the water, and sitting underneath is a huge amount as well. So part of what we wanted to do was just kind of give you the beginnings of understanding what this is. And each of these stages is the writing of the plan. When you start committing some of this to paper, this is your business plan in terms of getting going. As a reminder, what we would like to do is get some feedback. So if we could ask if you'd be willing to give up 2 minutes of your time, I'd really appreciate that. So if you would like to, please come down and let me know. Can I just see a show of hands? Who's willing to just give me some feedback for this on by way of a video for a couple of minutes? I've got 1, 2, 3, 4, 5, 6, 7. Pardon me. 8. Anyone else? Going once? Going twice? 9. All right. The bidding starts again. Going once, going twice, going 2.5 times. No, I'm kidding. Thank you so much for your attention. Thank you. I'll hand you back to Noof. Thank you.
مشكورين ويعني شرفتونا في اليومين الأمس واليوم في ورش العمل. من فضلكم اللي ما استلم شهادته بس يراجع الإخوان عند الطاولة ياخذ شهادة حضوره. وإن شاء الله نشوفكم باكر في الملتقى اللي هو ختام البرنامج. راح يشاركونا طلبة من كلية الكويت للعلوم والتكنولوجيا، مهندسين عندهم مشاريع التخرج الهندسية، راح يقدمونها لنا بإطار تجاري، نطلعهم شوية من الجانب التقني ونجيبهم صوب الجانب التجاري. وإن شاء الله راح يشاركنا بعد دكتور من بوكسل ودكتور محمد بطويح من المعهد العربي للتخطيط. فإن شاء الله نشوفكم باكر إن شاء الله الساعة 5 بإذن الله إن شاء الله.